let's take a look at things this morning. Actually, it looks like I just exited my trade from this morning. I took a short from this 5-minute SIBI here down into the sell side below this low. Just thinking Monday could have a deeper retracement back into the range down here, which is your 4-hour BISI. And oh, is my screen not sharing? Is it sharing now? Looks fine. Sarah, can you see it? Oh, good. You may have to just see purple squares swirling. Oh, I don't know. I'm not sure. That might be like a Discord loading screen or something. Yeah, you might have to just restart your Discord. Yeah, no worries. Okay. Okay, so let's start from a higher time frame perspective here. 4-hour. We just went over all the monthly, weekly, daily stuff in morning chart and chat, so I'm going to get down into the 4-hour from here. So still bullish off the higher time frames, but it's an NFP week. It's Monday, going to allow the action to develop a little bit. And if we're thinking in terms of a weekly profile, if we are going to continue trading higher into the later part of the week, then Monday is likely to consolidate or retrace into the range. And so that was the framework for the trade that I was able to identify this morning. We had a SMT at the highs with ES failing to purge Friday's high and NASDAQ purging Friday's high in the London session. So you have a higher high on NASDAQ, lower high on ES, SMT up there. Okay. And then you have inefficiency that exists below that can be drawn into. Okay, so as we get, that's your 4-hour BISI that I have marked out there. And as we get into the hourly charts, you can see how so far this morning, before I entered my trade, you can look here and see the SMT from the hourly, ES lower high, NASDAQ higher high, displacement lower, back through the midnight opening price. So identifying this as the early morning manipulation in the London session above the midnight opening price, displacing lower, trading up into what? The midnight open again. So referencing that as a premium to trade lower, and you're inside a SIBI. And you're seeing wonderful respect for it right here. So we trade up all the way to the high end. Perfect, right there. Okay, see that? All the way to the high end of the inefficiency, completely redeliver it, and then trade away from it here. Showing nice respect, closing below the low end of it. And then again, here we trade up one more time, and then again close down there. So showing really nice respect, we're referencing midnight as a premium and trading away from it. From there, I looked to a 30-minute chart. You could see we were trading inside this inefficiency right here. Okay. And then I dropped down to a 15. And you can see how we did already reach into the 4-hour down here. And we traded higher to reach back to the midnight open. But there's no new displacement through the midnight open. And when price reaches into the inefficiencies that exist below, it trades a little bit higher off of it, but it doesn't create a new BISI, which is initially making me think, okay, well, we're not seeing continued displacement to the upside. So the likelihood is that we're just going to consolidate or retrace back lower. And so from the higher time frame perspective, I was able to identify that we were trading in that SIBI on the hourly. We're referencing the midnight open as a premium. We had an SMT at the highs, and it's Monday, so we can consolidate or retrace into the range, and we're not as likely to continue running and make higher highs. Not initially anyway. Okay, we have a lot of inefficiency that exists below. And so then we trade down into the 15-minute inefficiency here and here. Trade higher off of it, but don't create new displacement to the upside. Then I go down to a 5-minute. Here is on a 5-minute displacement that you start creating back to the upside. But when we trade back into it, we go and close back below it. And then we have a 5-minute SIBI right here. We trade above it, respect it really nicely though. The wicks go above, but the body's all closing below. Okay, and we have the 8:30 opening price as well. So now we're referencing everything above the 8:30 open as a premium for the AM session. And sell side liquidity below this low from the 4-hour would become the target. So I found the short opportunity within here and take it down to sell side liquidity below here. Okay. Now we've run out the sell side liquidity and traded deeper into the 4-hour right here. Okay, so we're trading in that larger inefficiency, and we just want to wait and see now. Can we begin creating displacement back toward the upside? If so, then we can go and trade back through the buy side up here, above this high on ES and up above this high. And on NASDAQ, above these highs and above here. Okay, but we're waiting and following that displacement because we're still in a heavy premium of the overall dealing range from this perspective. So if I take the low all the way down here and put it up to the high, we're still operating within a premium. And we can see a deeper retracement going into the day. Remember, we have this area of inefficiency on the daily chart as well. So allowing for a deeper retracement, and then we want to see if we start to displace away from it. Okay. So one of two things. We're either going to create new displacement to the downside and continue retracing lower down into some sort of discount or PD rate below. Okay. Or we will find new displacement to the upside, and then we can look for long opportunities to target the buy side. So we're just in a position of wait and see right now. Okay, so ES and NASDAQ have both purged the sell side back into this 4-hour inefficiency. ES reaching back above the 8:30 open right there, running out a short-term high, and creating a new BISI. So now we can work between a discount array and a premium array, and we want to get a read for the order flow. So we want to see, is this discount array being respected and price is trading higher from it? Okay, if so, then we can reach for the buy side up here and the buy side up here. Or are we just running out a short-term high to continue going lower? So I'm not looking to take a trade entry off this right away. Instead, I'm allowing it to give me, help me build the framework. Okay. What about the equal highs above midnight open on ES? That would make me nervous about going short. Yeah, we're not really looking for shorting opportunities. Again, we're still looking to participate with the higher time frame bias, the monthly, weekly, daily bias, which is generally expecting higher prices. We're expecting the weekly candle to go higher. And so shorting opportunities, while they may be available, like I was able to find this short in the morning, they're not going to be the largest expansions. And you're fighting against the higher time frame order flow, so you just have to have different expectations. I would not be looking to short this. While it could work, I would be more in line with the higher time frame bias. So I'd just be looking for opportunities to go long. So this is all at a discount below the 8:30 open if we're going to go higher. So if we're going to see the AM session expand higher, then the best buying opportunities are at and below 8:30 open, which presents this as the first potential buying opportunity right here inside this BISI to take it up into the buy side here. Yeah, Axel. It is. So ES can continue reaching for the buy side above these relative equal highs right here, and then you have buy side up here and up here as well. But I'm just allowing things to play out a little bit more this morning, not trying to jump on anything too soon. No, I don't specifically use the 5-minute for seeing displacement, Douglas. It depends on the time frame that I'm it depends on the other displacement, the higher time frame displacement that I'm looking within. So how do I explain this? So you're working from the highest time frame down to the lowest. And so if you're, well, I'll talk about it in two ways, I guess. If I'm looking for price to trade through a premium array and keep going higher, then a 5-minute BISI that's created to the upside could just be working into a higher time frame inefficiency that's going to support a move to the downside. And so you want to be aware of that first of all. Like here, for example, on NASDAQ from this morning, all of this action trading higher is just trading inside an hourly SIBI. And so if I look at a 5-minute chart, you can see a BISI right there, and you can see one right here, but it's all just trading in an hourly SIBI. And so that's why the higher time frame framework and the draw on liquidity is most important. Okay, and you work from the highest down to the lowest. So if I draw out my hourly inefficiency here, and then go down, you can see that all of this price action, yes, it's displacing higher, but it's just trading into this inefficiency, and it's just working inside that range, and then continues lower. If from the other perspective, if I'm looking for a buying opportunity, I want to see premium arrays being traded through, and I want to see new displacement to the upside. So yeah, for higher prices, you want to see a close above the H1 SIBI. Yeah, ideally you'd want to see price closing through that. Yep. And then if I were looking to find a new buying opportunity from this 4-hour inefficiency here after sell side was run out, I would need the framework to align with that, first of all. So it'd be best to see some sort of displacement back through the 8:30 or midnight opening prices, and then to enter on a return to one of those prices inside some inefficiency. And in terms of the time frame for that displacement, it's not as important, but the higher time frame is better. So I'd be watching like my hourly chart, my 30-minute chart, my 15-minute chart, down to the 5, 4, 3, 2, 1. But what you want to be aware of is that not every displacement higher is an opportunity to go long on a retracement into it, because it can be displacing higher into a higher time frame inefficiency that would support price in the opposing direction, just like we saw up here. So while this is displacing higher and it offers some long opportunities on the way up in terms of a scalp, you're just trading into a higher time frame SIBI. And so if you continue to see respect for that SIBI on the higher time frame, you can't expect that your long trade is going to continue working up through the buy side. So you need to be watching how those higher time frame areas are being respected or disrespected. Yeah, sure thing. Okay, ES still appears to be reaching for the buy side above midnight here. So that's likely where ES is headed toward next, to reach back up into a premium above midnight. You can see why it makes sense to be a bit cautious on this morning though, because NASDAQ not quite following suit. We're displacing higher here, right there, but then going and trading and closing through it and reaching back down to the sell side down here. So I'd want to be a bit more cautious this morning. Again, we're trading inside this higher time frame 4-hour inefficiency, but we haven't seen any real displacement to the downside or back to the upside. And so it doesn't offer me any trading opportunity yet. It's just in consolidation. So I just sit and wait. And since we have the training exercise this week as well of using those 10 a.m. and 2 p.m. candles, we'll try and see what 10 a.m. has to offer around that framework. Okay, yes, reaching up into that buy side above the midnight open. If NASDAQ is going to go higher, you'll want to see it close back above this inefficiency here. So immediate rebalance there on the 15-minute. And so far just continuing to drop lower. You have more inefficiency that exists down here and down here. Okay. So ES likely reaching up into the buy side there. Let's take a look on the higher time frames as well. Okay, trading down into the 4-hour. 1 hour. So we're not seeing any SIBs above, no inefficiency for price to trade into. 30-minute. So it's just within this inefficiency here on the 30-minute. But if you're seeing closure back through this, then we can continue working up toward the buy side liquidity above here and up here. Okay, so referencing midnight open again there. We'll see if it can run out these highs. Is that a 30-minute SIBI on NASDAQ? Yeah, up here. So you can see it was nicely respected up there. And you had the 15-minute immediate rebalance right there. Trading inside the mitigation block as well. So you have a high, low, lower high. So this is your mitigation block. Trade through it here. Utilizing it there, trading within this range. And working lower off of that. So we'll see if NASDAQ can work back down toward the sell side below this low. Okay, and you see the nice respect for the consequent encroachment there. That's why we're utilizing this BISI right here to determine, are we just running out the sell side below this low right there to then go higher? Or are we genuinely starting to trade through discount arrays and work back lower? So we utilize that inefficiency again here, and you can see it's used as inversion to trade lower. If we were to close back above it and establish new displacement higher, then we could probably find a long opportunity to look for the 8:30 open and midnight open and buy side above that. But since we didn't see that, we just continue to wait, and price is continuing to work off down toward the sell side below here. Pablo ES rejecting new week opening gap. Oh yeah, let me take a moment to do those two. I haven't marked my new ones for this week yet. $28.5. Oops. So trading back below the weekly opening price on NASDAQ, so we're operating at a discount in terms of the weekly open. 40.5. Okay. Let's look at dollar too. So back below that weekly BISI. Let's see if dollar can continue gravitating down toward the sell side, or if it's going to just remain in consolidation inside that inefficiency. See a little bit of displacement lower there on the 4-hour after running out buy side. So far leaving that as a breakaway gap and continuing to work lower. I'd like to see it drop down through the sell side here. And then we'll see if it can get down toward here. That would be nice if it'll start moving one way or the other. Okay, yes, just back at the midnight open there. See if it can run these equal highs. Still just trading inside that 30-minute SIBI though. So being cautious of that. Nothing to see yet on NASDAQ. Still respecting up close candles. And just trading lower so far. It did create a small BISI right there and close through this SIBI. But I want to see how it responds within a premium of the range. So I'd still need to at least see it go and close back above this BISI right here before I'd be interested in anything. Still respecting that BISI from before. And trading lower off of it. I can offer you your 30-second model right there down into the sell side if this is going to continue drawing lower. But again, I'm not really interested in short opportunities at this point. Now that we're so far below the 8:30 and midnight opens. But you can see here, you'd have this as your draw from the 15-minute. And then go to a 5-minute. You ran out, 1-minute high, candle closes down, 30-second chart for value gap. So you could find a short entry within there. Again, this is against the higher time frame bias, so not a trade I would like to take. But this is how you'd frame it. And you could reach for your 10 handles and then sell side down below here. Alan, would a script that shows 4-hour candle forming while trading a lower time frame be helpful for this new exercise? It could help you, yeah. It could help you identify how that candle is expanding. Try it out. So that would give you your 10 handles on NASDAQ right there. That's your 30-second model, a bearish example of it. So you could either fully close it right there at 10 handles or take a partial and reach for sell side liquidity right here. Okay, so that would book sell side liquidity right there. Yeah, this is recorded, Rosemary. So that would be your short on NASDAQ, 30-second model right there. So you can see how this stuff can go both ways. You just need to identify where price is drawing to. That's most important. So that would give you your 12 or 15 handles that morning. And that'd be a fine place to be done on a Monday like this. 15-minute, let's cycle back through. So let's go from the higher time frames, and we can see where we can draw down into. So now with the 4-hour chart, we're still in this larger inefficiency. 1 hour, we still have, oh, we just opened, so it's 10 a.m. now, so we have an hour left on this candle. But you can see we've already drawn down into this inefficiency here. Oh, just shy of it actually. So if we are going to go a little bit lower, we can draw into that inefficiency. Otherwise, there's now inefficiency that exists above price that can be drawn back into. So let's take a look at 10 a.m. We'll mark that as our 10 a.m. opening. There. And I'll mark it on ES as well. And we'll see if we can frame something. So far, ES really nicely respecting this inefficiency from a 4-hour perspective. 30 minute, 15 minute, 5 minute. Okay. So if you're looking at this on a micro scalping basis, you could probably have a buying opportunity within here after dropping below sell side liquidity and the 10 a.m. open. You have a small inefficiency down here. You can see how when we drop below sell side liquidity, candle bodies respect it. So this can be a turtle soup buy down in here to take up to the buy side up here below the 10 a.m. opening price. We're still operating within a really small range on ES here though. Let's see how Nasdaq's developing as well. No real inefficiency to the downside on those lower time frames yet. 30 minute is starting to create an area of inefficiency, but there's still 26 minutes left. So we could still trade up to this candle's high and then there would not be a SIBI there. On the 15 minute, there's nothing. 5 minute, 4, 3, 2, 1. Let's see, 15-minute chart. Yeah, so I don't really like anything yet. We'll just let this develop a bit more. There's still a possibility here, as far as I'd see it, of reaching back down into this hourly BISI below. Digging a little bit deeper. So you can see I'm kind of using the idea of a SIBI being created to help shape the framework as well. So I don't have a fair value up here yet. I don't have a SIBI yet on the hourly chart, but we're displacing lower. And so this candle in the next hour, do I think that it would reach down below the sell side, leave this inefficiency, and then run all the way up to the buy side up here? Probably not. We do have an inefficiency that's being established in here, which means that this candle could trade up into this range between its current high and this candle's low. So I could find a trade opportunity that suits trading up somewhere into that range as far as this candle's low. Okay, but I'm cautious of the fact that we are displacing lower here. We don't have a SIBI yet, but if we're going to form a fair value gap, that means that this next candle can either consolidate, retrace, and leave a fair value gap behind, or it can continue expanding lower. And if it's going to continue expanding lower, I don't want to be buying in here and then just take a stop out on it expanding lower when I don't really have any confirmation yet that it's likely to trade back up into this range and back toward that candle's low. So I just wait for a little bit more information. See, now we're back below the 10 a.m. opening price. And if we're going to go lower, then we can utilize that to trade down toward here. So you can be short from there in that SIBI and take it down to here, the hourly BISI high. Again, all these ideas are against the higher time frame bias. So you can see how when I'm presenting these, it's a much more low-hanging fruit idea. It's not, let's go short here and reach for the weekly immediate rebalance. It's let's get 10 handles out of it and take profit. So we had the 30-second short in here, down to sell side. 10 handles, and then the sell side target was 13 or 14 handles, I believe. And we're just going to continue letting this develop a bit. Still not much to see. At the moment, if I were going to trade one of these to the long side, I would prefer to be long in ES than NASDAQ. NASDAQ's already run out the high from Friday. ES still has that buy-side liquidity remaining. And you can see that we've already started to create new displacement back toward the upside on ES. And NASDAQ has not done so. But I'm still even cautious with the long idea, just for the fact that the indices are not in tandem, working in tandem with each other. NASDAQ continuing to draw lower down into sell side, and ES purged the sell side and then started displacing higher, and is now just consolidating around the midnight open. I do think ES is likely to run above these highs. But nothing too clear yet. Still 21 minutes on this 30-minute candle, and we have this area of inefficiency that exists within here. So if we are going to find a long opportunity, it can be back into this range. That's where price will be seeking if it's going to go higher. So we can see NASDAQ draw back above this high. And we'll see if, in doing so, ES can reach above the buy side up here as well. Pretty quiet morning so far, though. Not really too much of interest at this point. Looking in that 30-second inefficiency right there. So we'll see if this can respect that and trade up toward the buy side above this high. Opening with a little imbalance there. I want to see it reach up for this high. See how it's still working inside this range. Okay, closing back below it. So leaving this area for now. So if we're starting to see lower time frames continuing to displace lower, that can give an indication early on that we could form a SIBI in here if we're not reaching back higher into old highs. And if we're going to see a SIBI form in there, then we're going to continue to see bearish order flow for the time being. And so I don't want to be a participant in long opportunities. Okay, back below the 10 a.m. opening price there. And now we're reaching up for that high. So back into that area of inefficiency on the 30-minute. It's not a SIBI yet, but you can see the inefficiency there. And it can reach all the way up to this candle's low, because that defines the area that has just been given sell side delivery. So you can have buy side delivery all the way back up into that candle's low. Okay, now we're back up into a premium of the dealing range from this morning. And you can see how this isn't really the kind of action that you'd want to be much of a participant in so far. And this is typically to be expected going into the AM session following a large range day. So on Friday we had this really large expansion, and you can see we go from that expansion to consolidation. And now we've run out the sell side so far, back down to this inefficiency. So we can still run out the opposing liquidity and reach for higher prices, being buy side liquidity above here and up here. But it is just Monday of the week. So we have to be open to the fact that we can continue retracing lower, back down into this inefficiency from the 4-hour and toward a discount of the dealing range before going higher. And so at the moment, I'm really not too interested in being a buyer just yet. Okay, so still leaving some area of inefficiency there on the 30-minute chart. You can see that. Again, there's still almost 15 minutes left before that would technically be a SIBI, but we do have that area of inefficiency there. So just noting that. And we're continuing to draw lower. Okay. So if this is to continue lower, then this could offer the 30-second model once again. Okay, back down to the down close candle here. Let's see if discounted rates start supporting a price move higher. We still have this area of inefficiency from the 30-minute that can still be fully traded into. So we have to remain open to that idea. Why there's really nothing to see within this. Look at all this range, and you can just see that we're trading within consolidation here. So nothing to do yet. We want to wait for a clear manipulation move from one side of the range and then clear and obvious displacement into the other direction. And we haven't gotten any of that yet. Just looking at this right now, could you clearly say that this is a buying or a selling opportunity? I could frame it either way. And so there's just nothing to do. So you still have the hourly inefficiency down here that we can gravitate into. And you're establishing new inefficiency on the upside. If I look at an hourly chart, still 41 minutes left, but see that? How we're potentially creating a SIBI. ES drawing back into 8:30 open and that 15-minute BISI right there. So if this is going to go higher on ES, I'd like to see that range in the 8:30 open supported price move back up into the buy side above these highs. If you're seeing closure back through that 15-minute BISI, then we can draw down into here and back into sell side liquidity. I'll note that there as well. Okay, so NASDAQ continuing to draw lower. I want to remain patient this morning. Nothing to do just yet. And just like I was saying in the morning chart and chat too, if you're newer, this is a great week to just observe and not really look to be much of a participant at all. Because if you look at the economic calendar, it's already telling you that this is unlikely to be a very clean week of price action. Monday, there's no news on the calendar. Tuesday, we just have some, I don't know if it's even considered medium impact, low impact news at 10 a.m. So you have factory orders and ISM index, and you have PMI composite at 9:45. So none of that is really too significant. Then on Wednesday, we do have some news, but it's an NFP week, and so we really want to be done with our trading by the AM session on Wednesday. But you have Powell speaking at 10, which is right in the start of your AM session. And if that is going to potentially be a market mover, then ahead of him speaking, then you're likely to just have consolidative seek and destroy conditions. And so there's really not a lot of opportunity in the early part of the week for clean and clear price action with some sort of high impact news event around it as well. And then after he speaks, of course, you have Beige Book at 2, and then on Thursday, he speaks again, and it's the day before NFP, and then NFP on Friday. So there's just really not a lot of clear opportunity given the economic calendar, and you want to factor that into your weekly outlook in the days where you may be interested in being a participant. Alan, what's an implied fair value gap? Implied fair value gap is it's two wicks together where you have a large body through it. So like this would be an implied fair value gap. So you have an immediate rebalance right here between this candle and this candle. But if you're still expecting price to go lower, then it would be the midpoint of this candle's wick and the midpoint of this candle's wick. And so that would be your implied fair value gap, this range. It's not really something that I look at because, or I don't think of it much in that way really, because I'm just looking at the wicks themselves to represent the premium or discount arrays, but that would be your range. So like you could use that if you believe price is going to continue working lower down into the hourly BISI, then this area could present a potential short entry for you, you know, in line with something else like a mitigation block here. But I'm not looking to be a short participant in this. I'm just waiting for some clear opportunity to go long. Okay, ES utilizing that 15-minute BISI that we were looking at and the 8:30 open to trade up toward the buy side. So I'd like to see ES continue expanding up through these highs. And then it'd be nice to see it continue reaching up for 41.45 as well. NASDAQ dropped through some short-term low down here and down below this low as well. And then you have the 10 a.m. open right there. Okay, we got 5 minutes left with the 30-minute SIBI above. So there's the opportunity for price to draw back into this area of inefficiency still. And in 5 minutes, when you have a SIBI there, price can draw into it, assuming that it's still open in a SIBI there. There you go, ES trading up through the buy side. Really nice from the 15-minute BISI below. So if I go to the 30-second on NASDAQ, we can see if price can draw up into that area. Or I'll go to the 1 minute even. So we have a little BISI right here on the 1 minute. And we're trading inside the range of this up close candle as well, which could be treated as your mitigation block if we're going to be draw higher. There's still nothing super clear this morning that I'd be eager to be a participant in. I wouldn't be looking to trade any of this myself. But we're drawing down into toward this 1 minute BISI. Switch head to it right there. Now we'll see if that can support a price run back up toward the 30-minute inefficiency above. If it just gets traded back through again, then we can just remain in consolidation or work deeper into the sell side, which I'm not interested in either of those scenarios. So I would just continue to let price action play out. Where would you put a stop? Yeah, if you are being a buyer in there, then you need a stop loss. I mean, at least below this swing, if not below low a day. But I wouldn't be interested in buying that. We haven't seen any indication that it's really ready to go higher. It's still just trading up into up close candles, showing respect for it, and then trading lower. So if you look at a 5-minute chart, it's never even gone through the mean threshold of this up close candle. and it's creating inefficiency on the 30-minute as well, which shows me that order flow is bearish, at least short-term bearish. So I don't have any interest in being a buyer. Let's see if it can draw down into this 1 hour BISI below now. 1 hour. Okay, and ES purged those highs above the midnight open, remained within the 30-minute SIBI. NASDAQ drawing lower. Let's see if ES will come off back toward these lows as well. You can see already the similarity between today's price action and what we saw on Monday, Tuesday, and Wednesday of last week. It's that kind of action where there's not a whole lot of clarity, and being a participant is much more draining compared to a clear expansion day. So you want to save your capital, your financial capital, and your mental capital on a day like this. And you can look to observe, but putting the intention in your mind in your trading day from the start of I'm not looking to click the button on a day like this will help you save a lot of your mental capital, because you can tape read with a lot less, you don't have to feel the pressure around it as much, because you're not looking to be a participant, you're just observing what's happening. And just observing anything doesn't need to use much of your energy. So you can see how being long in this doesn't really present the cleanest opportunity. Like I said, not interested in that. Close through it here and continue to work into sell side liquidity. And we're just consolidating. Still leaving this low in place. I'm not interested in anything here. I would probably, in these conditions, just wait for the lunch hour and be a participant in some sort of retracement on wherever the move has gone from the morning. So if we just draw lower all the way down into lunch, then we could potentially find an opportunity across that lunch hour or going into the lunch hour to run back on stops. And if nothing really happens there, then we can see how the PM session develops. Okay, so it's 10:30 now, so you have a 30-minute SIBI up here. All right. So if price is going to draw higher, this is where it can draw into, this inefficiency. ES can continue reaching up toward buy-side liquidity up here. Just offering the cleaner setup of the indices today. So buy-side there, and then all-time highs up here. NASDAQ can reach back toward this 30-minute SIBI. So let's see if we can frame an opportunity to reach up there. So if we're expecting it can draw up here, we run out the sell side here. We look to a 30-second. And we have a small inefficiency in here, 97 and a quarter, one tick. We'll see if it draws back down into there and the 10 a.m. open, if that can be utilized to reach up toward the 30-minute SIBI above. Okay, right there. And there's the tiny inefficiency. So this is like using your 30-second model, but instead of targeting the 15-minute swing, you're using an area of inefficiency as your target. So from the 30-minute, we see this CIBI up here, and you can see that when we draw through the sell side on this candle right here, we draw through the previous candle's low, but the candle body closes above it right here. We wick back below it here, candle body is still above it, so we can draw into the inefficiency that's been left behind. So I'm using that 30-minute inefficiency there as the draw, and then I'm using the same model that we talk about from the 30-minute. So price returns into an area of discount. So we're inside the 4-hour inefficiency. We're trading through sell side, so that's your 1-minute run on stops. Candle closes up. Then you look for your 30-second fair value gap. Nothing, nothing, nothing there. 30-second fair value gap. It's really small, it's just one tick, but that's enough. That provides the entry. It's in confluence with your 10 a.m. open as well. So that would work for your training exercise right there. That provides the entry, and you can manage the stop the same way using the 12 handles or the swing low. Okay, and then you're reaching for the 30-minute inefficiency. Initially the low end of it, and if you have more than one contract on, then you can reach for the consequent encroachment and the high end of it up here. Okay, so you can be partialing out there. And you can see how we can utilize the 10 a.m. open as well in terms of the 4-hour expansion. Okay. So when this candle opens at 10 a.m., there's an area of inefficiency that exists between the opening price and this candle's low. So it can trade back into that area right here, 318.5. All right, so there you go. It fully redelivered it now. So that would be your 10 a.m. setup. And now you have no inefficiency left on above on the 4-hour. So you just have the 1-hour right here. So your next target, if you're reaching for higher, could be the remainder of this inefficiency here, and you can target this candle's low, 326.75. So if you add some left to extend the trade, then you can target 326.75. Okay. And above that, you can reach for the 8:30 and midnight opens. And you can see you have a bit of a cleaner 1-minute fair value gap there for the entry. Okay, really nice. So that would book that right there. And then beyond that, you can reach for 8:30 open. And then you can reach for the midnight opening price. And if you still have more to partial out after that, then you can reach for the buy side up here. But that should be enough for a nice trade on a Monday. What's that? 50 handles? 52 handles almost. So that's pretty good. You're trading back above this BISI from before as well. I'm going to go ahead and remove this. Stop could be at break even at this point on that trade, because you have no inefficiency down here for it to return back into. See? So it'd be fine to go break even at that point. If it's going to come all the way back down there, then the likelihood is that it will draw back towards sell side. So you can go break even there and just let the remainder of it play out toward the buy side and your opening prices above. And ES should continue drawing up toward the buy side up here as well, 41.45. Did anyone use this for their training exercise? David, yes. Nice. Very good. So make sure when you do your submission, map out the framework of the trade. And show why it made sense for it to trade up here. Okay, we reached above the buy side right there. Now there's no inefficiency left on the 4 hour, the 1 hour, and we've traded up through the 30-minute SIBI as well. So of course we'll want to wait and see where this candle closes in 19 minutes. If it closes back below the 30-minute SIBI, then we can still continue to draw lower. Though at the moment, it's appearing like we're more likely to draw up toward the 8:30 and midnight opening prices. On the 1 hour chart, you still have this SIBI above, which can be reclaimed and trade lower off of it. So we'll want to see new displacement taking place up into this inefficiency to show that we're still showing bullish order flow. If we're just seeing consolidation in it, then we'll want to be cautious of that, as we could see a retracement back from this area. And at this point in this trade, it makes sense to be mostly partialed out of it. So you're taking a partial in that 30-minute SIBI, taking a partial at the 4 hour candle low like we talked about right here, and you could partial again above the buy side there. Why does it make sense to take a partial instead of holding? Well, it's because we're trading on a Monday where we have high impact news later in the week, and we're more likely to be operating within a larger consolidation than we are to have a massive expansion day. There's the opportunity for it to have a large expansion, and that's why you'd want to be taking partials and leaving yourself something to hold for these opening prices and the buy side, rather than just taking your full position off, because we are trading with the higher time frame bias. But if you're just thinking about the weekly profile and the fact that we can remain in consolidation into the later days of the week, then you wouldn't be as likely to anticipate a really large expansion day. And so you're more likely to just be in consolidation. And so you want to partial out of your trade and protect yourself on it, leave something for higher targets. But if you just end up retracing back into the range, then you've paid yourself on that trading opportunity. Oops. Yeah, no worries. So coming back down now into that same BISI from before, and we'll see if that can continue supporting a move up toward the opening prices. If we trade back down below it again, then we can just continue to trade within this range now. Let's see what inefficiency exists below too. Nothing on the 15-minute. 5-minute, we have a BISI that's being formed right here. Let's look at that new week opening gap again as well. So we're back toward We're still below the opening price of the week. ES trading above it and reaching up toward the buy side up here. Yep, exactly what Carson said. Allows for consistency and compounding. Partials always pay, holding doesn't. So 38 seconds. We'll have inefficiency existing here on the 15-minute chart. No fair value up yet. Then on the 5-minute, we have a BISI forming below. So we can allow for price to return into that area here. And there's a small area of inefficiency down here as well. Okay, 10:45. So we'll see if it can draw back into here. Definitely a cleaner opportunity on ES so far this morning. So the trade on ES is just a like a 2022 model of sorts. Running out the sell side, shift in market structure above some high, and then you have a 15-minute fair value gap that's returned into right here. So that would be your buy, stop under the low, target buy side here and here. So that would look like that. Target these highs, and then target these highs. All in line with the higher time frame bias that we got from the monthly, weekly, daily charts. Okay, see here how you're not displacing higher out of this inefficiency? So if you don't start to see new displacement higher, the likelihood is you can return into higher time frame inefficiency below. So we're watching on a 1-minute chart here, but if we go to a 5-minute, you have a 5-minute BISI down here. And so I would wait and see, does price make an effort to return into this area below? If it doesn't, that's okay. Okay, ES coming back into the high of that 30-minute city. Still has not closed above it on that 30-minute time frame yet. But we have on the 15-minute here, and we've got buy side above. Just drawing back into these volume imbalances here. I'd like to see ES continue reaching up for the buy side up here. So just continue that bullish order flow and reach into 51.45. And NASDAQ continuing to head up toward the 8:30 opening price. Another thing too, David, is by taking partials, you're reducing any potential emotion on the trade. So it lets you trade more objectively. So if you've already partialed out majority of your position, it's going to be a lot easier to hold that last piece of your position up toward these opening prices and the buy side up here than if you were still holding your entire position. Can you show again how you know the main direction of order flow without looking at a footprint chart? You mean like from the higher time frames? Higher time frame, monthly, weekly? I can show you that. So starting with the monthly chart, you're just looking for a couple things really. You're looking for, are down close candles supporting price? Are we creating BISIs as we trade higher? And are we closing through prior candle highs? Here, down close candles, we trade through the opening price right there. And here, this range supports price. We're creating a BISI and we're closing through previous highs. Again, closing through previous highs. Again, closing through previous highs. As long as we continue to do those things, then I just remain expecting bullish order flow on the monthly. Okay. And then from the weekly, we're looking at the same things. BISIs being created. BISIs supporting price right there. Okay. Trade higher. New inefficiency higher. Down close candle. Trade through the opening price here, right there. Next candle, down close candle, the range of it is supporting price move higher. We create new inefficiency. We're trading and closing through the previous candle high. We use this inefficiency here, trade higher. Down close candle, here we trade through the opening price right there. And then on the next candle, still respecting the range of this down close candle and trading higher. So I'm just using this order flow from the higher time frame, and then you think about it from a fractal basis. So this weekly candle is going to be a lot larger range than your 1 minute candle. And so if you think about this like a 1 minute chart and you're expecting it to trade higher, well, this weekly candle trading up through the buy side is going to be a really large range potentially. And you can find an opportunity on a lower time frame to then be a participant inside the formation of this candle. So if we're looking at bearish order flow, we'd just be looking for the opposite things. We'd be looking for up close candles like this to support a price move lower. We'd be looking for SIBIs to being created, and we'd look for closure below the prior candle's lows. So here you can see when we make this short-term high in here, we create a SIBI. We're closing below lows. We draw higher, but we do so just to trade into the up close candle, which supports the price move lower. And we're referencing back to that SIBI right there. Then we begin closing again through the prior candle low, and again here, creating another SIBI, drawing back into it, respecting it, trading and closing through that low. Alan, can we use whatever high time frame candle we want on the exercise? I'm trading appropriate low time frame compared to my high time frame candle. Whatever high time frame candle. Well, for the exercise this week, the idea is to focus on those 4-hour expansions, so the 10 a.m. or the 2 p.m. candle. But it is fractals, so you can see these things, same things across other time frames. Let me know what you're talking about, I guess. Okay, let's see if we can draw back down into the 5-minute BISI here. Okay, there you go. And there's another inefficiency below as well. So I want to see if there's an effort to come back into a discount. And trade into this lower inefficiency. And you have that high as well for a 15-minute immediate rebalance. So that's 18,308. David, take a look at this now and think, you can reflect on this. How would you feel differently in this position if you take a partial up here and you're now at break even on the trade and you're holding the last pieces versus if you're holding your entire trade still and you're seeing this? What would be the difference in your mind? That'll help you understand the idea of working with those partials. Okay, so we have discount of the price range right here. Let's see if NASDAQ can draw back into that area. And we'll want to see where this 30-minute candle closes as well in the next 5 minutes. Do we close above or do we close back below this 30-minute SIBI? If so, then this can just be viewed as a large mohawk and price can continue to work lower. So we want to be aware of that and see what the next 5-minute candle does. Still respecting the consequent encroachment of it on candle closure, but we'll want to see where this candle closes here on the 5-minute. Still have yet to trade through the opening price of this down close candle here. So not really viewing a change in state of delivery quite yet, which opens up the possibility for price to just be trading into this SIBI to continue going lower. That's why I've been cautious on the long opportunity this morning. And we're waiting to see where this candle closes to see do we respect that 30-minute SIBI or not, since we have 3 minutes left. Alan, look at a 15-minute candle at 10 a.m. and trade 30-second. I mean, yeah, you can look at, if you're talking about looking at the 10 a.m. opening price, like based on a 4-hour candle or an hourly candle or a 30-minute or a 15-minute or a 5-minute candle, that makes no difference in that sense. You can frame it however you like. So that's totally fine, Alan. We're just talking about framing the idea based off of the 4-hour expansion. So where is that 4-hour candle likely to expand toward? That's the direction that you want to be a participant in. But whether you frame it off a 15-minute and trade it off a 30-second, that's fine. No difference there. Okay, just reaching up into these SIBIs. Still, we're waiting to see where the 30-minute closes. So we still have 2 minutes and 20 seconds left. You can still note that there's a little area of inefficiency there on the 15-minute chart. So you have the candle closure here in a minute and a half. Price can draw back into that area. So you want to be aware of that. Okay, 1 more minute left. About 30 seconds here. So let's see where this 30-minute candle closes. Okay, so we closed above the SIBI right there. That's a bullish signature. So now we'll just want to see if we can continue seeing signatures that support bullish order flow. So here we're closing above the consequent encroachment of this 5-minute BISI. All right. And we'll see if we can frame an idea to reach up toward the buy side. You could already have the trade just based off of the 5-minute BISI here. So you need to allow for this one to trade so you can be long in here, allowing for this to trade and this to trade. So your stop would still need to be down here on that. But you could reach for the buy side here. The opening price is 8:30 and midnight, and buy side above here, above midnight. I'm going to let this develop a little bit further. So at the moment, still just trading in this SIBI right here. And I'd like to see if price can draw back down toward a discount. Any questions so far from this morning? Sarah, learning a lot. Jed, morning, no questions from me. Spent the last few days back testing 30-second model and now looking to forward test it. Awesome. Good stuff. Okay, so still just watching for this to trade up toward the buy side, but I'm allowing for a retracement to take place here. If it just runs off, that's okay. I can find a later opportunity. Remember, we still have that area of inefficiency below here on the 15-minute. David, what you said now, that's okay. I'll just wait for another opportunity. How do we develop that mentality instead of FOMO? You develop it by spending a lot of time in the charts and seeing how many opportunities exist throughout the day, and then recognizing that it's the same thing is really repeating over and over again. So as long as if I have a good idea of the draw on liquidity, like if I'm expecting price to draw back up toward the 8:30 open or toward the midnight open, I can find another way to be a participant in it. But I want to frame a trade where it makes sense in terms of the risk and the time that the trade would likely take to play out. So like if I really expect this to go up here, in theory I could be a buyer all the way up here. And as long as it goes there, I could have a profitable trade. But if I'm looking at the market structure right now based off of the higher time frames, I would have to allow for retracements to occur into inefficiencies. So if I were buying it up there and we have this inefficiency here on the 15-minute, I would still need my stop loss to be placed all the way down here. And that's a fairly wide stop to just look for this range to play out. And so I'm waiting for the opportunities to stack more in my favor to present an opportunity to be a participant. And as you spend more time in the charts, doing your back testing, forward testing, just finding examples of these things occurring throughout the day, then you'll start to work toward that mentality of, I want to see things set up like I want them to. I want it to be that ideal setup, and then where I know I have a better read on the market, a better read on the order flow and where it's drawing toward. And when you have a clear read on the order flow, you're going to find that there's a ton of ways that you can enter the market, because the entry is the least important. It's more, the focus should always be on the draw on liquidity and how do we get to the draw on liquidity. Because really, if you're thinking about the very basics of a trade idea, all you need is where is it going to go and where is it likely to go and where should it not go until it gets there. So if here, this trade idea, my expectation is that it should go up toward the buy side up here. It should reach into that 30-minute SIBI. From here, it should reach into here and then up toward here. And then my expectation on the other end of things is where should it not go? Well, it shouldn't go back below this low before it does that. So then whether I buy this candle, or this candle, all of them offer a profitable trade opportunity. So you're focused on what is the draw on liquidity, where should it go, and where should it not go. And then you just want to wait until the opportunities or the price action lines up to where you can frame that favorably. Because if I'm expecting price to just draw to this high, I'm not going to buy this candle and put my stop loss under this low. That doesn't make sense in terms of risk management. But as you see more things occur in the market and start to understand the fractal nature of things too, you'll be able to shift your mentality to that point of, I'll just find another opportunity. Because, I mean, for example, I'll just show how it's the same things over and over again. Anytime price trades into a fair value gap and you're expecting it to go higher off of that or lower if it's bearish, you're going to have a market maker model taking place. So like down here, for example, price trades into this 4-hour inefficiency. This is your sell side of the curve, and this is your buy side of the curve. So still expecting that price can work higher, which means you have a smart money reversal down here on the 4-hour chart, and then you have some sort of expansion and an opportunity to accumulate and take it higher. Okay. This right now is trading down into this 15-minute inefficiency right there. So price trading down into the 4-hour inefficiency and then working up higher back toward the highs is the same thing as price trading down into this 15-minute inefficiency and then working back toward the highs. Because now if I go into a 30-second chart, if this is going to continue trading toward the buy side, this is your sell side of the curve and this is your buy side of the curve. You see that? So when you start seeing things from that perspective of it's all fractal, it's just the same thing that's happening on a higher time frame is happening on a lower time frame, you start to unlock lots of opportunities for trade ideas. And so if I don't get this buy and it runs right off to the buy side up there, well then if I look at this on an hourly perspective instead, let's say it ran all the way up into, or let me look on a 30-minute chart instead. Or let's go, let's go with a 30-minute. So the 5-minute is in there. If I don't get that buy and it runs all the way up to the 30-minute and the midnight open, then we still have this high to reach for. And now if I'm viewing this whole thing here as a 30-minute, on the 30-minute chart, as this is the sell side of the curve from price trading into the 4-hour inefficiency, and this being the buy side, then when price trades above these up close candles right here, now I can use that whole area as mitigation and I can find another buying opportunity within that range. So I'm not scared if it runs off, because if it's going to go up to the buy side, I have this entire range that I can be a buyer inside of. So I have all the opportunities that exist within this range to still be a participant. And so if I don't get the earliest one, then I'm not bothered by it, because I know that there's going to be another opportunity later. There's always going to be another candle opening, which means there's always an open, a low, a high, and a close. And if there's an open, a low, a high, and a close, then I can identify manipulation, I can identify distribution, and I can find a way to be a participant. It'll be much wider stops than 30-minute time frame point of view though, right? If you trade it off the 30-minute, yes. But I can identify the framework here on the 30-minute and then trade it off of a 1-minute or a 5-minute chart. So if I'm expecting this area to support a continued move higher, then I can wait for price to trade into here and then let's say create some new displacement up through the highs, and when price returns back to the midnight or 8:30 open inside some inefficiency, I can buy that and put my stop wherever is relevant on a 5-minute or a 1-minute chart. So I don't have to do stop placement based off of this time frame, but I'm just recognizing all the points of interest that I can be a buyer within, as long as it's going to continue going higher. I can be a buyer down here in the 4-hour inefficiency. I could find a buying opportunity here in the 15-minute. I can find a buying opportunity at these opening prices, anywhere inside this range of the up close candles. And then I could even find like a very late distribution setup up here into the buy side. And then if it's going to continue expanding beyond the buy side, then I can just wait for a retracement back into some inefficiency that's formed after price is traded through the buy side, and then be a buyer inside of that. So there's going to be plenty of opportunities. It's just about spending time with it and learning to recognize where those opportunities occur, and then starting to see this from a fractal basis. So the same things that are occurring on a weekly, a monthly, a weekly, a daily chart, the same exact things are happening on a 1-minute chart. So it starts to open up a lot of opportunity for you. Now we've reached back into a discount, and we've traded into the 15-minute inefficiency and the little 5-minute inefficiency right there. I'm just going to take that one off because we have a higher time frame one here being the 15-minute right there. Okay, so I'll just want to see now, can we find new displacement from here and continue reaching up toward higher prices? And if we fail to do so and it just drops down lower, then that's okay too, because I'm not interested in being a short participant right now. And so I would just continue to wait. That's very helpful. Yeah, no worries, David. Like I said, it just takes time. It takes time being in the markets, doing your journals and reflecting on things, and you'll start to see this stuff. Douglas, 30-second model here. I missed that. 1107. Let's see. Yeah, you could. I mean, there's your 30-second fair value gap there to enter in. So it would be like that. And you'd reach for 10 handles. Entry would be there. There's no inefficiency below on anything above that 15-minute. We're kind of just consolidating right now, though, between the 30-minute SIBI and that 15-minute BISI there. And you'll see the 30-minute is also, at the moment, trading back below that SIBI. So I like to use fair value gaps like this to frame short and long opportunities that occur throughout the day. So I can use this initially when price was down here as a draw on liquidity, which you saw. That trade from the 10 a.m. opening price up to the 30-minute SIBI. And then I can use this as the day goes on to frame where should price trade to next. So this can kind of be like my turning point in price for whether it should go higher or lower. If it is now going to continue respecting this, which means candles are closing in or above this area of inefficiency, then I can continue to expect higher prices. If it's closing back below it, then the likelihood is that price is just going to consolidate or draw lower. And if I'm not interested in being a participant in consolidation or price drawing lower, then if it doesn't close in or above this inefficiency, then I just do nothing and I wait until it does. And if it doesn't do that for the rest of the day, then I just won't take a trade. And that helps keep things really simple for you, because if you can identify an area that should shape the framework of your trade, like should this continue trading higher, and you can do so from a higher time frame perspective, this limits the amount that you need to be even watching from the lower time frames. Yeah, sure thing, David. So price is trading, we dropped down into the 4-hour inefficiency, and then we had this 30-minute SIBI right here. There's no inefficiency above on the 1 hour or 4 hour or anything above in this range. So my highest time frame area of inefficiency is right here, the 30-minute. Okay, so I'm using that to help me see, is this area, now that it was traded and closed above, is it going to be respected as a discount array and utilized to trade higher with my high time frame bias, which is bullish? So if it's closing in or above this inefficiency, then I can continue looking for long opportunities to target the opening prices, the buy side liquidity above here and up here. If it's closing below the inefficiency, then the likelihood is that I'll continue to see consolidation or for price to trade lower back down toward the sell side. I'm only interested in long opportunities. And so if I'm seeing closure below, then I don't have to do anything at all. I don't even have to go to the lower time frames and watch what's happening. I could just stay here. Yep, no worries. So 15-minute BISI is being respected so far, right there. You can see how we're dropping into it, but the candle bodies are closing above it. Very nice. 15-minute or 5-minute chart here. So now we're starting to expand away on the 5-minute chart. See if we can reach up toward the buy side up here. Okay, so that 30-second model that you mentioned there, Douglas, that one would have played out there as well. Very nice. ES just back into consolidation down here. We're tracing back below midnight and 10 a.m. open. And I'm using this 30-minute SIBI now to frame the idea of what's going on. So as long as price is below this 30-minute SIBI, I'm not really interested in a trade. So the best thing I could see is, at this time, the best thing I could see for price to trade up toward here would be for this to drop down below sell side liquidity. So run out at the very least this low, if not this low, and then create new displacement and get back above this 30-minute SIBI. Then that could frame a long trade for me to reach up toward here and toward the opening prices. As long as it's below it, like it is right now, then I'm not interested in anything. You see how you identified 30-minute? Yeah, so you just go to your 30-minute chart, and you're just looking for where that inefficiency is. So it's right here. This candle's low and this candle's high, the separation in between, where it's just the body and the wicks do not overlap. That's the SIBI. Sell side imbalance, buy side inefficiency. So it's delivered the sell side and it's inefficient on buy side delivery. And then it was redelivered right here, so it was made efficient right there. And so now if price is going to go higher, it shouldn't need to go and close back below this inefficiency. If it is, then it's likely just going to consolidate or reach back down toward the sell side. So I want to see closure back above it. And if we're not getting that, then I just won't look for a trade. So now we have the 15-minute BISI right here, which price is trading back into. Right there. That inefficiency there. So trading back at a discount again from this range. So it's totally fine. It can trade down into there and continue trading higher off of it. Inside this inefficiency here as well, and inside the breaker. So this can present a potential buying opportunity from here, but my preference would be to wait and see price back above the 30-minute SIBI. Okay, still below it. So it can continue to seek lower prices. Drop down into the sell side below this low. Let's see, let's look at ES too. Let's find the dealing range here. So just coming back toward a discount. And there you go, NASDAQ drawing back below the lows. Just shy of this low here. So dropping below the sell side, but so far not closing below it. So viewing that as a bullish signature, but we want to wait and see how price continues to develop. Because if we go back and close below, then it can continue working lower. And we're still below that 30-minute SIBI. And we're below the 15-minute BTC as well. So at the moment, we're not seeing respect for those as discount arrays. You want to be watching based on candle closure. But let's see how these continue to be respected or disrespected. All right. So far, sell side run out there. We're trading back above. Let's see if we can close back above this inefficiency. Not yet. Yeah, they're a bit more in tandem, but NASDAQ has failed to run out these highs that ES has already reached for. So we still have London highs intact on both indices, but these highs back from toward the 530 and 745. NASDAQ is nowhere near those yet. So ES is already running out, and NASDAQ is still sitting in the lower end of the range. So at the moment, I would be more likely to lean toward NASDAQ going and making a lower low than reaching up toward these highs. That's why I'm requiring for price to go back above the 30-minute SIBI first before being interested in a trade idea. If you look at an hourly chart, like or 4 hour even, 4 hour or hour, it doesn't matter which one you look at here, but like Carson talked about in the on the Sunday call yesterday, you haven't had any change in state of delivery. So we've just been trading lower, and there's been nothing really to indicate that we're ready to go higher prices yet. You haven't even traded through the opening price of this down close candle. And so we can just continue to trade lower. Showing respect for that 15-minute BISI as inversion so far. Okay, and there we closed below it. So we closed back below, and we closed below the 30-minute as well. See that? Okay. So we can still remain in consolidation or go to lower prices at the moment until we see closure back above. So now I'd just be looking to, if we're going to go to lower prices, sell side liquidity here, 10 a.m. open, and sell side liquidity here. But I'm not interested in a short. So even though I can recognize that it's likely to draw down to there and could take a short off of it, like I could be short from here, right, when I said that, to take it into the sell side liquidity in 10 a.m. open, I'm not interested in that. My higher time frame bias is to the long side, and those are going to be my highest probability, largest expansion trades, and that's the ones that I want to be a participant in. Not every move needs to be a one that you're part of in terms of a trade. So really not too eventful of a morning. I mean, this was probably the best opportunity that we've looked at this morning. This buy from the 10 a.m. open, looking for that expansion back into the 30-minute SIBI and the buy side above. And that's why you take partials, where we talked about here and up in 26.5, which was the low end of that 4-hour area of inefficiency. So that would get you pretty good partials out right there. It didn't go much higher than that. And then this ends up coming back down. And now we'll likely reach towards sell side liquidity and this inefficiency from the 1 hour. So we're really using that higher time frame to shape when and where price should go. Okay. Well, any other questions from this morning? I think I'll probably close it up here in just a couple of minutes. We'll see if we do trade down into the sell side down there. That's where I would expect it to reach for next, below these lows and into this inefficiency. So if you were to find a shorting opportunity, like the one that I talked about up in here, then you can reach into the sell side and then hold another partial for consequent encroachment of this inefficiency here. Any questions from this morning on anything we've watched, how we've used the higher time frame? Good stuff. All good. Would y'all like this recording from this morning? I think it should be recorded. If y'all want to watch it back, I can share it to YouTube. Okay, yes. Okay. All right, as long as it got the audio and stuff good, then I'll I'll get it uploaded later. Okay, well, that'll close it out for this morning then. So just as we get toward the lunch hour, watching for price to continue trading down into the sell side. We haven't had any real change in state of delivery for the for price to trade through the buy side, and so I would still be watching at this point for price to trade back through these areas and close above in order to look for a trade toward the buy side. If we don't get that, then I wouldn't take anything. And then as price continues drawing lower here, you want to look within this range from this high to whatever swing low is formed down here below south side. And then identify inefficiencies that exist within that range. So you can start with your 30-minute chart here, and then go to your 15-minute, and then go down to your 5-minute. And you want to see if there's any SIBIs within that range, because after sell side liquidity trades here, there's the opportunity for price to return up into those inefficiencies. Okay. That, I think we'll close it out right there. We'll just see if this draws down into sell side. Oh, and going into if this draws down ahead of noon, then that presents the opportunity for a lunch hour retracement between 12 and 1 p.m. to return back up into the range and whatever inefficiency has been established between this high and this low. So you just want to be looking out for those things. Okay, well, if there's no other questions, I'll go ahead and close it up here. Thanks for joining me this morning. Hope you found this one fun and insightful. Learned a thing or two. And stay safe, be responsible the rest of the day. Again, there's no real news today, so it's totally fine to just let the action play out, be an observer, help build that framework for the remainder of the week. And then recognizing that it's an NFP week as well. So if you do decide that you want to be a participant this week, then aim to do so up until the Wednesday AM session, but not beyond that. Okay. That's going to be all for me. If you need me, tag me in the chat. I'll be around the rest of the day. And I'll see you tomorrow. Take care, everyone.